Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Investors who are looking for dividends should always be looking for stable companies that can provide that dividend, that cash flow year after year. Three that I think are really attractive for investors right now are Vici Properties, Verizon, and actually Apple. Apple may not be thought of as a dividend stock, doesn't pay a very high yield, but great business and great cash flow from that business. So I want to highlight these three and why I like the cash flow from each. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And if you like this video, I have a newsletter called Asymmetric Investing. I have a link to that in the show notes. And the first one I want to highlight is Vici, because this is a REIT that may be a little bit overlooked by a lot of investors. This is the snapshot of Vici Properties. This is a REIT, or real estate investment trust, that owns a lot of the real estate in Las Vegas and then for casinos across the US. You can see that it's a very big company, nearly a $50 billion market cap. Most of the major casinos operators in the US have sold their real estate to either Vici or gaming and leisure properties. So that's where this company sits. Now, the key thing with any REIT is that you have a stable business behind it. And that's the great thing about the gaming business right now is casinos are actually doing really well, whether that's in Las Vegas or it's in regional casinos. Revenue is up basically across the board. Las Vegas is hitting revenue levels that have never been seen before. So they actually have really solid businesses behind the REIT right now paying the rent. That's the really positive thing compared to a lot of hotel REITs or restaurant REITs, commercial real estate REITs, where the customers may not be paying rent in the same expected way that you would have thought in the past. So that's the thing I think is really strong about Vici Properties. The dividend yield is 5%. You can find higher dividend yields out there, but I think that's a really solid dividend yield for the stability of the cash flows that are coming into the company. Verizon is the next one that I want to talk about. And Verizon has obviously been beaten up over the past year. You can see that the stock has fallen almost 50% since 2021. But that gives an opportunity for dividend investors because we now have a dividend yield of 7.8%. At the same time, the company's cash flow is actually getting better. Operating cash flow is improving. The investment they're making in things like new spectrum, building out the 5G network, is actually coming down. So cash flow going up, spending going down. That is putting the company in a much better financial position. There is a lot of debt for Verizon, so that is a risk. $182 billion is what you can see here. But I like the stability of something like cellular networks. People aren't just going to go out and cancel their cell phone plans at a really rapid clip. Churn is obviously something that we worry about in this space. But I think there's more value in growth to be had. Verizon has had a lot of success recently in what they call fixed wireless, or basically 5G broadband wireless. You just plug a box into your wall and you have wireless service. I've been using this for about a year now. I've been using this for over a year now, and it's actually better than cable for me. So that has been a growth avenue for them. And I think that will continue as more and more people will find out about it and get service in their area. So the market might not like Verizon right now, but I think the risk reward and the dividend yield that investors are getting is really positive and makes this a great stock to hold today. And the final one is Apple. Like I said, not a high dividend yield, 0.54%. And one of the reasons the dividend yield has dropped is because the stock price has actually gone up. But cash flow is just tremendous for Apple. If we look at cash from operations, I'll pull this up in graph form, and you can see cash from operations over $100 billion per year. Great balance sheet for Apple. Not as much cash as they used to have, but still a company that is not burdened by debt like a company like Verizon is. And that great cash flow means that they can either buy back stock, pay a dividend. I just think that gives them a lot of optionality from a financial perspective. There are getting to be a number of great dividend choices for people looking for a steady income stream. But I think at the top of your list should be companies like Vici Properties, Verizon, and Apple. Great businesses, steady cash flow coming into them. And what we get as investors is a steady dividend payment. So those are the three picks that I have today. What do you think about those? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.